Good morning, everyone. Good morning from Los Angeles. Welcome to Trading with Sergio. How was the weekend? How's everything going? Um, it's kind of getting redundant, right? When the markets are really struggling, uh, everyone gets quiet, and it's very noticeable on X. All the put sellers, all the sellers of options are like, oh, they're all disappeared. They're all posting accounts down 40, 50%. Well, yeah, this is the other side of the coin, folks. I mean, I'm not going to call it a bear market. We're definitely in a correction. Correction. I mean, the trend is down. The trend is your friend. So either you stay the heck out, sit on your hands if you're only bullish, or you're going to ride the roller coaster. And I can already tell from the participation in the live streams, the numbers are down because people are just getting tired. But then we may have just started, right? So, what's the antidote for this type of market? Well, number one, you don't push, size small. Those are the things that we all need to do, obviously. Understand risk. And if you're going to ride the wave, you're going to ride the wave. You rode it up for 3 years. And then the saying goes without question, markets walk up the stairs and take the express elevator down, and a lot of stocks are doing that, although the indexes are not as much, although they have kind of given up the ghost on the triple Q and SPX. But this is what happens. This is how the markets behave, and markets will not bottom until people stop looking for a bottom. That's about it. A lot of people go like, is this a bottom? Is this not a bottom? They draw chopsticks, they draw lines, charts. Look, I'm a technician myself, but they don't work. When the market's in a distribution phase, and at some point, right, we will bottom, but then it'll take a little bit of time now, just for the fact that there's a lot of damage done. And most folks are still looking for a V bottom because they're used to V bottom for 3 years, right? We would sell off and come right back. This doesn't look like that to me. This is a lot more macro sensitive, I think. If oil prices stay as high as they are, and gasoline just hit $6 in California for regular, it's gonna play a role here. And the other thing I was doing is I was buying gas the other day at $6 a gallon, and I use regular gas, luckily. My wife has an EV, and she's like laughing at me. She goes like, haha. I'm like, yeah, you're right on that one. But the point I'm trying to make is I paid $6 for regular unleaded, and I saw at the same station diesel was 7.5. Now, granted, it may be cheaper at some other places, but what do we use diesel for? Right? Transportation of goods of all kinds. Trucks, they don't run on gasoline, they run on diesel. So costs are going higher for the consumer, and consumers already stretched, and we'll see where this macro is going to fall. Iran seems to be a little bit more of a worthy adversary, I guess, because by now everybody probably thought this would be over. They would have folded. There is definitely talk about thousands of troops being shipped to the Middle East for a ground. I'm not going to call that invasion. Iran cannot be invaded. It's a huge country. But maybe, put a play on Karg Island, where Iran's 90% of oil comes out of, pumping stations and things like that. So, it's kind of interesting that the whole world who depends on oil, right, is not doing anything about opening the straits. Who knew about Straits of Hormuz before? Huh? Any of you knew it? I knew it. Yeah, it seems like we just can't open the damn thing for oil to start flowing, and then supposedly there's a lot of damage done. And is there another shoe to drop? I mean, if we do put boots on the ground, what's going to happen to the markets? So putting boots on the ground changes the dynamic of everything, right? Because then we're opening another can of worms, as if one can of worms is not enough. See, I can tell the participation. I see only 10 people live, right? I'm on X and I'm on YouTube. This is what happens when the markets are, in this phase of downtrend, and every tick up is facing selling, fierce selling, really. So risk off. As far as personally speaking, very, very small positions, mostly cash. Markets open every day. You don't need to do everything, something every day. A lot of people feel like they're obligated to do something. I'm like, no. Obviously, the volatility is there. Maybe day traders will trade, but then again, if you're not on the right side, you can, they all put these tight stops and they all get stopped out 10 times a day. Not my cup of tea. Although I did trade the futures last night. I bought them when they were down 40 handles and sold them at up 10 handles. Open higher, made a few bucks. But, I'm just picking my spots and just patiently waiting because I've seen this movie before. It takes time. There's a lot of technical damage done to a lot of stocks. A lot of stocks who didn't belong where they belong fundamentally are already down 40, 50, 60, 70%. And indexes are not catching up. Mag 7 looks like shit. Even Google that was holding is just looking like shit now. Although it's the only one, I think it's the only Mag 7 above the 200 EMA. Still holding right at it. And I'm giving it a shot at Google with some June, July options. Directional, really. Nothing more, nothing less. Cut exposure pretty much on everything. Not even doing put credit spreads at the moment because you're just going to be in the money. And wheelers have disappeared from X, because what's happening is that they're getting assigned and they're like, okay. And then stock's down another 10% the next day. Then they go sell at the money calls just to break even. Stock goes down another 10%, and then, it just doesn't work. In this type of market, not much works unless you're short. You're short the stocks, you're short call credit spreads, you're short calls, not covered calls. Covered calls are not going to work. I mean, they are going to lower your cost basis to a point, but they're just not going to work. They're not going to give you the protection. And if you do go buy index puts, indexes are not dropping as fast as some of the underlying stocks are. So that's the problem with these types of markets. But people are so used to stocks only go up. I'm like, no, stocks don't only go up. What happens is that, there's phases. There's 3 phases of these markets. We have an up leg. We have consolidation. We have another up leg. On the way down, it's the opposite. We have a down leg. We have distribution, consolidation, sideways, another down leg. So is this going to be a multi-leg down? It's been so far pretty orderly, actually. I mean, a lot of people are looking at it like, oh, capitulation, and this. I'm like, there's no capitulation. The volume is really low, actually. But the writing was on the wall. If you guys go check out some of the older videos I put out, some of the live streams, distribution was pretty evident. I mean, every single down day while the market was going sideways for 3 months, literally. Red bars for down volume days were a lot higher than green bars. So, distribution was there. And, I mean, look, stock market is not that complicated, right? Okay, so you can't look at the stock market as anything more than supply demand. At the moment, demand is not there, and supply is outstripping demand, and the prices need to get adjusted to the downside. It's pretty much as simple as that. Obviously, there's other things that go into it, such as geopolitics, macroeconomics, all that kind of stuff. But ultimately, supply and demand. More sellers than buyers. People ask me this, like, well, why is the stock going down? I go, more sellers than buyers. And then they go like, come on, man, it's not that simple. No, it is that simple. More sellers than buyers. Stock price needs to get adjusted. When you look at a lot of stocks, they're in 40, 50% already. And some are more. If you're holding those, now you have to understand the math, right? So if you're holding, I don't know, a Hood, popular, SoFi, popular, HIMS, popular, all these ex-Furu stocks, IREN, very popular. I'm not sure. The fucking thing is not worth the paper it's printed on. But long story short, they're down a lot, right? So now if you're holding at higher levels, first of all, if a stock goes down from 10 to 5, it's down 50%. Same thing with your account equity, drawdowns. If your account goes from 50K to 25K, let's say, trading account, now you have to go back up 100%. Same thing with a stock. If a stock goes from 10 to 5, it has to go up 100% now for you to break even. 50% down, 100% up, I think is missed by a lot of people. And they write it down, and then it takes it forever, and then the goal is opportunities, right? So if you're stuck in something, unless you have unlimited amount of money, which we don't, nobody does, you have to understand the math. The math is against you. So therefore, maybe you shouldn't let it go down 50%. But then people are very used to stocks coming back or market coming back and saving them for the last 3.5, 4 years. And when that happens, people get comfortable with that. Well, then one time it doesn't work out, you get nailed to the wall. That's why you keep size small. That's why you take L's as you see fit. You got to take L's, man. We're trading, right? I'm not there's a lot of people go like, oh, I'll just hold. Okay, hold. You didn't take the L, you hold. You sell some covered calls, lower your cost basis, hoping. Now you're in the hope category, hoping market comes back and saves you. At some point it will, but then, you're not holding a Mag 7 stock. Maybe those will come back first. But if you're holding a lot of these stocks, Oklos, IRENs, NBISs, CIFRs, all the power suppliers to the data centers. And look at Micron. Look what they're doing to that stock last few days. Absolutely trashing it. So we'll look at some charts. I'm picking my stops. My spots, not stops. I don't put stops, by the way. I do put mental stops, but I don't put physical stops. And but then you have to be disciplined enough. If you don't do that, if you don't do physical stops, you have to be really, really disciplined to take the L when you enter the position. You have an idea where you should take the L, depending on what kind of strategy you're deploying. But you need to take L's. The small L today, lowercase L, could be a capital L later. And when you do that, it's tough to get out of capital L's because the math now is against you. Like I said, if the stock goes down 50%, it has to go up 100% for you to break even. Meanwhile, there's other groups of stocks that are doing well, right? Oops, excuse me. For example, oil stocks, right? They're all making 52-week highs. So rotation is definitely there. And if you don't want to participate in rotations, sit on the sidelines. If you want to participate, there's plenty of stuff that's moving the right direction. If you're only bullish, if you're bearish, this is your time. If you're bearish, this is your time, right? So you need to press, you need to do whatever you can do because, these down legs don't last that much. Ultimately, stocks go from lower left, well, not stocks, markets go from lower left to upper right, right? We talked about this before. If you bought every top tick since 2000, you still be so far ahead with the indexes, right? If you bought the top tick in 2000, .com before the .com crash, if you bought the 08 top tick before the GFC, if you bought the top tick, before the pandemic, if you bought the top tick before the interest rate hike, if you bought the top tick before the tariff tantrum that we threw last April, if you bought the top tick before the Japanese yen carry trade, you would be so far ahead if you're on the indexes. Because that's the point. You got to own indexes. Investing and trading are two different things. You got to treat them differently. But a lot of people start as traders and then become investors because they don't want to get out. They don't want to take the L. If you don't want to take the L, you're going to have a very difficult time in this game. Taking the L is lowering your equity. You're losing money. Nobody likes losing money, but And those small losses could become major losses, and then to dig out of that hole while everything else is happening around you, right? Because you don't have the bullets to shoot now, it's going to be very difficult. So, I mean, my experience says that's to me. I pass it along to my chat group, which is on Telegram, but we're working on a Discord. I'm not sure. I'm told that it's going to work out. Discord probably requires more work than I'm willing to do, but then we'll have to figure that out. And so what else is going on? Good morning, everyone. Good morning, Martin. If anybody wants to come on and chit-chat about anything except politics, you're more than welcome to. And here's the link. Here is the link. And here it is. Right there. Just ask you that you're in a quiet place with good internet reception, and we'll have a nice chat. So let's go take a look at what's going on in the markets. You know, we opened strong, sold off, and now we're selling off some more. And I'm buying some Google options, way out of the money, low delta. Can't lose more than what I put up, so I'm okay with that. You guys can see this, right? Yeah, there goes Hood. I'm short some PCS as I rolled them. Should have taken the L. Yeah, we're like almost low of the day now. Oil must be rallying. There's definitely 100% correlation. 99%. There's never 100%, but between USO and SPX. Yep, 129 now. Wow, that's crazy. I mean, USO is just not budging. USO meaning the oil, crude oil. It's back up to the upper Bollinger Band. MACD turning up. I think that there's going to be a sell-off here, though, shortly at some point in the next probably week or so. And that's when the bottom is going to come in. Because I don't think we have seen the whites of the people's eyes yet. When the eyes rolled back of your head, you had enough, you just capitulate. I don't think that has happened. Oh, we're red now. That's interesting. That's interesting. Yeah, just not lasting. Just this is what the markets do. They're going to frustrate the heck out of you. Well, yeah, they're retesting the low of the day just about. 63.56 was the low of the day today for SPX. High was 64.20, 64.30. Open very strong, immediate sell-off. This is what the bear markets do, folks. This is the red line. This is the 2-minute chart. 10-minute chart, same thing. VWAP following it down. Pressure, pressure, pressure. Every time we bounce the VWAP again. It doesn't mean that we don't get bounces. It doesn't mean that you may have some intraday rallies going, but this is what the markets do. Markets frustrate people. And until we see a bottom, I see on X quite often. This is the daily chart of SPX. Let's just go to the big charts. And there it is. Lower lows, lower highs. We just rolled over. So how far are we? Let's say 7,000 is our high. We're at 6,400, 6,350. It's getting there. We're down about, down about almost 10% on SPX. And how far are we down on triple Q? Triple Q is nasty as well. Let's see what that looks like. Yep. So 621 high, 622, 560, about 10% there as well. And MACD below zero. And when MACD is below zero, bad things happen, folks. So just be careful. Where is support on SPX? A lot of people are calling for 6,000. They're just looking at chopsticks. I mean, yeah, I kind of agree with that. 6,000 is okay. But then there is some support before then. There is support at like 6,200. So another couple percent lower from here. Here we're kind of in no man's land at the moment. 6,200 first. If you look at chopsticks. and then 6,100, and then 6,000, actually below 6,000, yeah, right about 6,000. But a lot of stocks are a lot worse, doing a lot worse than the markets are. And VIX is above 30. VIX is about 30.60. In fact, it's down today. It's kind of surprising. That may kind of hint for a short-term bottom. USO making higher highs, 129. Yeah, I mean, the only thing that I'm watching on USO is that it's in backwardation. So if you look at the, spot month futures versus, usually futures are in contango. If you don't know what that means, meaning that simply means the back months should be higher than the front months. Sometimes we'll go in backwardation, and in crude oil, we're definitely in massive backwardation, like massive. So September contract is like 88 versus 108, so it's about 20% backwardation, and December is lower yet. So meaning the participants in the markets are expecting by September crude oil to be in the 80 range, right? $75, 80 barrel range. That's what the backwardation is showing. But short-term pain for sure. And this is a bullish chart on USO. So, instead of getting stuck on some financial, which is in bear market, and a lot of the industrials are in their bear markets at the moment, oil stocks have done extremely well. Like, for example, ExxonMobil. There you go. Look at that. There's a bull market somewhere, Kramer says, right? So you got to, once in a while, you got to listen to Mr. Kramer, although he's wrong 9 out of 10 times. Suncor Energy. Look at that. They're on just beautiful charts. Phillips 66, which is a refiner. And what happened? Froze. Having a lot of issues with Swim. Actually, they're red. That's kind of interesting, actually. And Valero. Yeah, Valero is also red. That's interesting. I do believe that USO is going to have a pullback, and that's when we're going to hit a short-term bottom. We'll probably make another high on USO. It's going to take time. It's going to take probably a couple of weeks for a bottom to come in. But SPX is definitely on a downtrend, making lower lows, lower highs, or literally retesting the lows of the day at the moment. And the reason for that, yeah, we are absolutely retesting the low of the day. There we go. The reason for that is all the Max 7 has been shot to pieces. Okay, let's start with that. Microsoft, it's 2-minute chart. Let's look at the dailies. A little dead cat bounce today, but it's about to give up the ghost. Meta. What happened to all the put sellers on Meta? Huh? Yeah, okay. Well, a lot of software stocks have been selling off as they are. Amazon. They're all under the 200 EMAs. When stocks are under 200 EMAs, you really need to be careful. That very rarely happens. And then when all of them happen at the same time, you really need to pay attention to that. Apple now it's under 200 EMA. Apple looked okay. Google definitely struggling here, only down a few pennies, but we're right at the 200 EMA. So that's why I'm kind of giving it a shot. But if I'm wrong, I'm wrong. And Tesla, down from 500, we're down to 350 range. Lower lows, lower highs, man. It's just tough. NVIDIA just rolled over, actually, went under the 200 EMA. So under these conditions, people calling for bottoms are, I'm not going to call them stupid, but, they have no experience. Stocks usually like these, Mac 7s, Mac 10s, don't go under 200 EMA that quickly. And then you need to be patient now. If you're only bullish, if you only play the long side, you need to be bullish. If you're bearish, this is your time. You better be making the money, because nothing goes down forever and nothing goes up forever. But then the bulls are always under the impression that stocks only go up. Not so, folks. Not so. Yeah, we're about to make a lower low for the day, actually, which is shows the weakness. Yeah, right there. We're retesting 63.60. I was gonna put a call debit spread on 6,400, 64.10, but that got shot to pieces. So where are we? 63.60. 63.80, 63.90. 225, too high. We're at 60, and we only have 2.5 hours to go. Yeah, let's see. 6,400. $1.60. Maybe I'll do the debit spread. I have some time for a pop if we do get a pop out of this. We'll see. I may just buy the futures again at some point. But yeah, I mean, we're just in a downtrend. Just no ifs, no buts. And where are the USO puts? May puts. I'm kind of interested in USO puts. The USO is at 129. May go way out of the money. May 85's $13, $23. May 90's $70. I'll probably buy some 90s, about $1.50 range if it gets there. Low today is 155. I think it's worth a shot. I think we're pretty close to a short-term bottom here, and that probably will equate to a long-term, short-term top in USO. What else is going on? Silver hanging in there, actually. Found some support here. Same thing with gold. The key is also TLT. A lot of people nobody's watching the TLT, although we're bouncing today. 20 and 30-year long bond, long end of the curve interest rates have gone quite a bit by about 30 to 50 basis points. That's a lot, by the way, folks, in a short period of time. Dollar index is getting stronger because interest rates are going up, which is not friendly. Dollar going higher is not good for the U.S. stocks. So that's another headwind that the market's facing. And as far as crypto, this is IBIT. This looks like another leg to just fall off of to me, man. Just like before, right there. We did that, and now we're just doing that. Yeah. Although I did DCA this morning, again, the same dollar amount on Bitcoin. This is Ethereum. Same thing. Looks like a ledge to fall off of. So be careful, folks. Be careful. Keep your powder dry, and some of them infamous or famous names, hymns, right back to 18. It's just, I'm interested in Nova in my long-term port. Yeah, about 32, hopefully, if it gets there. My long-term port's getting shot to pieces, too. I was doing so well. Kava, I'm long at 59, 58.5, 59. I'm long UPS, still, and now basically break even on UPS. I was up about 30 points. Google, luckily sold the 350s for May. They're going to hopefully expire. Worthless, I took in $26, lower my cost basis. I bought that in April. But if you look at how weak the Mag 7 is, a lot of the Mag 7 stocks are at their April lows. Microsoft is one. Meta is another one. So when stocks are doing this, when generals are behaving this badly, sickly, the soldiers are not going to save the market. So be careful. I'm still working, still paying attention to my 52-week high list. Pay attention to rotation. There's not much that they're buying other than oil stocks at the moment. So just be careful. That's all I'm saying. Market's open every day. Don't feel like Rush and Hood making it lower low. Yeah. I need to close that PCS, take my L, and get the heck out of Dodge. You know, hood at 60, actually not hood, but HOW at 60, which will put this about 18.5 range. I'm going to be very interested in HOW. Other people talk about nothing but about SoFi. What about SoFi? I mean, it's a garbage chart. It's into a little bit of support. It's just people with clueless ideas because they have this bias they created for themselves. Stock is cut in half, although you must understand stock is up 100% from last April lows still. You know, 33 to 15, more than 60% haircut from the all-time or from the highs. But then people don't consider that this thing was $8.50 in April. So it's up still 90%. Same thing with hood. People go hood. Okay, what about it? Stock's down literally 100 points from the top, 90 points. But you remember it was $30, so still up 100%, right, from a year ago, April. So, but then if you're just going to write it up and write it down, good luck. That's all I'm going to say. I can't do that. As a trader, I can't do that. There's Palantir. It's going to go retest the low probably. It looks like a deadly chart. And charts don't look good right now. They're just pretty much bearish. If you're not bearish, stay the fuck out. You know, everything's getting shot. Here's Micron. Straight from 470 after the earnings. And earnings were great too. And everybody's puzzled now. Why is the stock being sold off? That's the classic distribution. Sell on good news. Micron is selling at like a 3 PE, right? But then people, I don't pay attention to that. Stock is telling you a story here. Stock is telling you that it may be done. Now, where would I mess with Micron? 470 down to 325 in about 8 days, 150 points. And all the fools who go, I sell puts, I sell calls. I'm like, yeah, okay, if you sell puts on Micron, where are you now? Literally in a week. How are you going to protect yourself? MACD going under zero. Not much good is going on there. I mean, even the good groups now are getting shot, like SanDisks, right? They're going below 50 EMA. Although there will be some rallies in these. You can easily trade these both ways, up and down. They're volatile enough to give you enough rope to kill yourself with, to hang yourself with. Well, Micron, 200 EMA first, maybe, 275 range. I'll give it a shot. Maybe put credit spreads on them with that money, buy some called debit spreads or something like that. But everything is on sale. So does that mean it's a good time to buy? Well, no. What I'm saying is that if you're a DCA passive investor, yeah, always. Dollar cost average, indexes are down. Sure. Why not? Actually, we're making a lower low now. That's kind of interesting. Yep, we just made a lower low for the day. We just can't hold. That's it. And when every rally is met with selling, what do? You just go sit on the corner, watch. You don't need to do anything else. Picking bottoms is like catching falling knives. I am not good at it. As it is, I'm losing money with small L's because I'm selling some put credit spreads. It's not working. Buying some calls, that's not working. So I need to be careful. I need to have bullets to shoot at some point. But the only time that if you're not short this market, you should stay out. That's about it. If you're short, great. All power to you. If you're able to short and hold your short, great. No problem. There was like a little bit of a disconnecting correlation today in the morning with USO and SPX. Both were up, and now we're giving up the ghost on SPX, which is kind of expected. The daily chart looks sickly. Walking down the, Bollinger Bands opened up after being tightest for 3 months, 3 years actually. Now we're just walking down the Bollinger Bands, and that's what happens. We get to a point that there'll be a mean reversion rally, back to the 200 EMA probably on SPX, the 6600 range. But this is not bullish, folks. If you're hoping for a bottom, come back a week or so. We'll find out. And indexes being down 10% and stocks down 50, 60, 70% should tell you something. So, and my point is, what's going to happen to those stocks if the indexes go down another 10%? Because I'm pretty sure if we put boots on the ground, this is going to look quite different. And I still don't understand why we're doing this. I did a few videos about it. I'm from the Middle East. I understand what goes on there, but this one, I'm not sure what we're doing. Supposedly we're spending $1 billion a day on this. And I'm like, okay, cool. I mean, I don't worry about it, but boots on the ground is going to be very, very difficult for the market. Because I don't think the sales pitch was that. Okay? Sales pitch was, we end wars, we don't create wars, and we've done nothing but creating wars. So I think maybe current administration thought this would be like Venezuela. They're mistaken. Iran is not Venezuela. So let's answer some questions. Hey, Mojo, how you doing? I said you're still doing. Thank you, man. Looking at PBR, not the beer. Oil exploration. Yeah, anything regarding oil is doing well. But still be careful with that because they have gone up so much that it's been part of the rotation, folks. You need to pay attention to rotation. A lot of people don't. A lot of people just are stuck in the same damn fucking stocks. Petrobras, yeah. I'll bet you it's making a 52-week high. There it is. I mean, why not trade these, right? My 52-week high list has been full of oil stocks for the last 2 months, even before Iranian action took place. They've been going up. So market knows, market senses it. Just don't argue with price. Just follow the trend. And PBR is that one, obviously. I put up Valero, I put up ExxonMobil, Chevron. These are big companies. They're going up like tech stocks. Although they're getting quite stretched now. So Mojo, I'd be careful with PBR. When a stock is 50, 60, 70% above its 200 EMA, you got to be careful with that. Remember, we used to talk about that, right? We used to talk about that when you were stuck in BMNR or not BMNR, MSTR. Remember that? Okay. So I'll be really careful with these as well. That's why I'm just kind of looking like maybe like a little bit of a counter trend, situation. Means nothing. Mark is telling you a story, man. Those stocks have been selling off for a while now, right? Mark is telling you a story. Don't argue with price. Price takes precedence for me, and then volume. So Mark has been telling this story for a while now. Meta did not start going down yesterday. After the earnings, Meta started going down. 750 down to 500. Yes, it's a Microsoft, huge pullback. 570 to 3 whatever. That's like trillions of dollars market cap. You guys must understand, market will do what it wants to do. You have an opinion about a price of a stock. You don't know more than market does. I don't know more than what market does. Market's telling you a story. Now you can sit there and argue with that, and you're going to lose. Because every low you pick is going to be a lower low after that. Just wait. Let it settle down. If you're only bullish, if you're bearish, short the shit out of it. If you're bullish, only looking to the upside, and 90% of the people are probably bullish, right? They only think buy low, sell high. Okay, well, that doesn't work. What's going to work is that wait for the dust to settle. You don't need to pick the low, because a lot of people pride themselves. I picked the low. I'm like, you're not going to pick shit. So don't pick the low. Don't try catching falling knives. It's been going down for 2 months now. Just let the dust settle. Catch it. Catch Meta maybe from 550. Let wait. It settles down. Maybe on its way from 6 to 750. Catch it. If you're bullish. Because the trend is down. You're going against the trend. I do sometimes go against the trend myself on like parabolic stuff. Like USO, for example. I don't mind buying some puts. You know, gold happened, the same thing. Silver, the same thing happened. When parabolics take place, they will end in tears. So what kind of counter trend plays you're putting on is the question, not just what stocks you're looking at. Because people looking at the same 10 stocks while the whole world is going buying energy stocks, right? If I look at my 52-week high list, it literally 90% of them are energy stock, from small, mid cap, large cap. That was your opportunity right there. So if you're stuck in SoFi watching it fucking bleed every day, you're just kind of being a dumb shit about it. You know, I'm sorry. I mean, that's what it is. What do you know about SoFi that the market doesn't know? You think you have some information that the market doesn't know? You know, people who are in love with SoFi. Oh, the CEO bought more. Yeah, well, okay. So, big fucking deal. They just create these biases. Don't create these biases for yourself, folks. You're just going to go to the poorhouse with it. Even energy selling off today. Well, yeah, those are not energy stocks. Those are very high valuation, very high PE, very high beta stocks. Those energy stocks we're talking about, you know, BP, Shell, ExxonMobil, Chevron, Valero, Phillips 66, Suncor Energy, all these other names. Those are stocks with earnings. None of these stocks, BTU, you know, NOV, MP especially, right? Okay. Marathon Petroleum, I mean, I don't know. Well, today is the first day that you're seeing a decouple because these stocks have gone up so much, right? So if you look at Exxon, if you look at Chevron, some of them are down. Phillips is down. Yeah, but intraday down, a little bit of a red after going up like multiple percentages. So that's why I'm kind of looking to go, okay, do I short USO here now, or do I go buy STO, which is the 2X ETF, inverse ETF of USO? So I'm thinking about it. You know, I'm not going to go jump on it, but I'm thinking about it. But today is the first day that I see USO is up, right? USO is at the high of the day, but then look at the airlines, right? USO is literally at the high of the day, and airlines are selling off still, which they should. Cruise liners are selling off, which they should. And if you look at, you know, those stocks you put up, Doug, that's I don't think that's an energy stock, but MP. Yeah, MP is not a energy stock. I don't know what you're looking at. Those are all very high PE garbage stocks. And I said that to you before and you didn't like it. Same thing with IREN. There you go. I mean, people keep typing IREN. What about IREN? It's just making a 52-week low. These are very high PE, zero earnings, non-proven stocks. We're talking energy stocks. Energy stocks. I mean, I can go through my 52-week high list, but I don't want to waste too much time. Go look at it. Go build one. Look at your 52-week high list. It's all energy stocks. Right? Okay. Well, it's Patterson Energy, for example. Look at that chart. Well, does that look like MP? Does it look like NOV? No. Those are not energy stocks. These are true energy stocks. There you go. You got to just trade these. But then people are going, no, I want to trade SoFi. I'm like, why? What do you know about SoFi? Fucking thing is 15. Okay, what do you know about SoFi? Market's telling you it's worth 15. You're going to say 2 years from now it's going to be 50. Are you fucking kidding me? If you knew that, you would put everything into it. You don't know that. How do you know it's not going to go back to 8? You know, people just are stuck on these damn stocks, man. Which is by the way, byproduct of a bull market, right? They don't know what happens on the other side of the coin. I'm not upset. I'm upset that people don't listen to people with experience who've seen this before, and they just create these biases for themselves. There are a lot of people on X that I respect, and YouTube, not much really, but that they have seen the other side of the hill. The other side of the hill is very slippery, folks, and you are experiencing that now. So my thing is, I just can't argue with it. You know, price is the price. right there. I can't argue with price, man. So in a bear market, what do? You look for outperformance. How do you tell that? If you have a watch list and something stocks are green already with the market on its butt, those are the ones you pay attention to. You don't go jump on it, but those are the ones you pay attention to, because when the market does bottom and turn, those will be the ones go up first and go up a lot. So, underperformance, outperformance, pay attention to these things. These things matter. These things always matter. They will never change. Market, another 100 years from now, we're all gone. Market's still going to do the same thing. Okay, so don't argue with the market, man. Market's telling you a story. Story is it's in distribution. Prices are going down. Nobody knows where the bottom is. Nobody does. Even all the chopstick drawers and whatever. Nobody knows where the bottom is. So just be cool. Just stay away. Trying to pick bottoms is futile. You don't need to be that accurate, honestly. So to me, it's like, at the moment, I think a counter trend trade with limited downside, risk is proper for me. And how do you do that? You just go buy some freaking puts, man. Although they're very high IV, although you may not make money, even if the market tanks, but then when parabolics happen, parabolics don't end well. I know that from experience. Look at what happened to quantum computing stocks. Look what happened to gold and silver stocks. Look what happened to gold and silver themselves. USO is going to do the same thing. I have actually more conviction because it's in backwardation. I mean, commodity markets are very, very rarely wrong. Listen to the market. The market's telling you oil by September is going to be 75, not 105. Okay, listen to that. Don't be a jackass and say, no, I know better. Nobody knows. I don't know. I'm telling you, folks, I don't know, and I should know, and I don't know. That doesn't mean that I have no confidence in what I'm doing. That means that markets decide for me. If the market's like this, my decision is stay away. Size small, stay away, live for another day. And then when the time comes, you can put the gas on again. It's all good. All right, if we own oil stocks, should we be tuned to war? Well, it will happen before. It will happen before. So oil stocks have been going up. Okay, let's call it the crisis in the Middle East is a month old. Okay, we're into our 4th week or 5th week, whatever. Look at Exxon, look at Chevron, look at all these Valeros and all the major names, small cap, mid cap, large cap. They have been going up before this happened. So market was already kind of going like telling you. They have been on their way, right? And truly. I mean, all stocks have been going up for 3 months now, way before the market, way before the crisis took place. So, yes, what's going to happen is that if you do own a bunch of oil stocks, you should start cutting exposure because you have done extremely well. While the rest of the market is bleeding, you made money. So, again, if you're a trader, or I don't know who you are, if you're a trader, different, what kind of positions you put on, what kind of structure, I would definitely take profits if I had oil stocks, a ton of them, right? Yeah. The short answer is yes. And when you did enter, did you have an exit strategy? If you did, you probably are there, right? So absolutely, yeah. I mean, I don't know where USO is going to end up. I don't know where crude is going to end up. I don't know. I mean, nobody knows. But a lot of people, I feel like they're still very bullish on the market. They're hanging on for dear life. Good for you guys. Do it. That's not the group that I'm interested in. What I'm interested in, not losing money. If I'm going to lose, I'm going to lose small L's. To keep my powder dry. Yeah, I may be down 10%. Okay, so that's fine. I can make that up like this. But if you're down 50%, you need 100% up to get back to even. That's a tough, tough, tough game to play. So my goal is to just Sit. Market's open every day. I'm not in a rush. I'll take a shot here, take a shot there, but I'm not going to sit here and argue with the market. Always listen to the market. Mr. Market knows well. So with that said, nobody wants to come on. Sophie, Sophie. Nah, I don't know. I really don't know. I mean, a lot of people talk about SoFi. It's like, oh, this is great. It's a fucking bank stock. It's an expensive bank stock. Just like people are in love with Tesla. I love Elon Musk. Don't get me wrong, but it's I mean, should I dare say it's a car company? SoFi is just a bank. Expensive bank. Very expensive bank. And if the economy, macro slows down, loans are not paid, defaults start creeping up, which already are at all-time highs, by the way. More than welcome to check my facts. Go to Federal Reserve Economic Data, free website. Look at the delinquencies, credit cards, auto loans, mortgages now kicking in. Look, man, the economy is not what the government's saying it is. It's pretty ugly out there. And with the oil shock that we're getting, that's like an additional tax on the consumer, which supports the economy to the tune of 75 to 80% of GDP. It's a pretty simple picture. That's why the market's selling off. It's sensing things are not okay. Well, we've been only going down for like 2 weeks now. 3 weeks maybe. We've been in distribution for months, but the downside, down leg just is very new. And yeah, there'll be rallies. Yeah, there'll be trading opportunities. Just wait. There's no rush. Just wait. We have time, nothing but time. Because everything that you do is going to be wrong, pretty much. If you try to pick bottoms, by the handle, people try to catch it like you drop a knife, really sharp blade from third floor of a building, and you go, oh, I'm going to catch the handle. I'm like, oh, that's painful. Don't do it. But again, to each their own. Everybody knows something. Markets are open, and we have a buyer and a seller. That's why we have markets. Post it up. But being defensive, being, having a memory of what could happen is very important. And people like myself, a couple of people on X or veterans have it. Newbies have no idea. And I call everybody who started during the pandemic in 2020 newbies. You're all newbies. You've only seen a bull market. You're just starting to see what could happen with the market down 8, 9, 10% indexes. And you're already going like, oh my God, the end of the world is near. I'm like, bro, we've been only going down for 2 months. 2 weeks, 3 weeks. Average, if we're in a bear market, average bear market lasts like 16, 18 months. Again, I'm not saying we are in one, but what I'm saying is that, if you don't have the experience and have seen it before, where do you pull from? Well, you pull from your market memories of 4 years. You made all the money. Now you wrote it up. Now you're going to write it down. And that's what markets are for. Right? Markets open. And you can make a decision and take a profit, take an L. If you bought a SoFi at $8 last, April, you got lucky. You picked a low. Okay, let's say you did. You wrote it to 35 in 6 months. That's 4x. What the fuck is the expectation here? What is it? It's going to 100? No. Stocks like NVIDIA's and Palantir's come once in a lifetime. SoFi is just a bank. Robinhood. Look at the comparison between Robinhood. If you bought Robinhood at 30, wrote it to 150, 5x in 6, 8 months, and you didn't take it, you're a fool. I'm not saying it because it's back down 50%. I wouldn't have probably even waited. I would have probably taken it at 3x. Who's going to give you 3x on anything in 4 or 5 months? And then people were like, oh, it's going to 300. I'm like, okay, good luck. So Robinhood is an expensive broker. Look at Schwab. Look at Interactive Brokers. Compare those three. Look at the charts. Robinhood down 60%, Schwab down 8%. Interactive is not even down for the year. Why is that? Maybe Robinhood's clientele is just YOLOers that are blowing accounts right and left already. Potential, right? So think about these things, folks. It's not that hard. Again, you just don't feel obligated to trade or invest. Just take your time. Let the dust settle. Let's see where this settles. It will be end. Okay, one thing I know for sure, this will end. What level we will be when it ends, I don't know. 6,000 on SPX, maybe. Lower, maybe. Boots on the ground, crash, maybe. I don't know. I'll just follow the lead of the market. You know, market's telling me I'm not happy. I'm like, neither am I. I'm taking L's. I'm not happy either. So, in fact, shut down. Go away for a week. Let the thing settle. Why is everybody so interested in it? Day to day. This is what happened. That's what happened. I'm like, no, man. Otherwise, you won't survive. You won't have longevity. You'll blow accounts. Because you're like, you have no history to pull from. Because you haven't seen it. You haven't seen stocks going down, basically. And just all these newbies, they go like, oh my God. I'm like, but oh my God, this would be only going down 3 weeks. Hold your horses. We may have just started. Again, we may have. So with that said, I'll be back on Friday. Let's see where I'm not Friday, Wednesday, trading with Sergio. If you're put a thumbs up, it's free. Subscribe to the channel, it's free. I'm just trying to pass on. By the way, none of this is financial trading or investment advice. It's for information and education only. What I do is very risky. Don't follow me. Do your own due diligence always. And, but there's one thing you cannot buy. You cannot buy or learn experience. And when you do have the experience, it saves your ass from a lot of tight spots. And that's why I'm here. I'm here to pass on my paid forward, pass on my experience. You may like what I say. You may not like what I say. I'm not wishing for a bear market, because bear market, a lot of people will lose money and a lot of people will blow accounts and they will swear to never come back. And we don't want to lose people. But then there's always newbies coming around thinking, because they see a video on YouTube with some punk in a Lamborghini, which who knows, verified, not verified, So I post all my positions, by the way, Monday, Wednesday, Friday on the community page. I've been doing it since this channel started. Go check it out. You will figure it out if I'm making money or losing money, but I have nothing to hide. I'm not competing with anyone. The market's tough enough. So to me, it's like, but then I see mistakes out there that people latch onto, and they follow these influencers with 50, 100, 200,000 followers, right? These people are fools, man. They have no idea. All they know is I sell a put, then I sell a call. I sell a put, then I sell a call. The fucking stock is going down 50%. You can do whatever the heck you want. It's not going to help you. And if you're under the impression that the V bottoms are always the case, like Tom Lee says, where is Tom Lee, by the way? I don't know. Right? Look, market's telling you a story. Listen to the market. Don't listen to me. Definitely don't listen to some of these ex-fools. Just listen to the market. It's right there in front of you. Don't argue with the market. Market's telling you something. Market says I'm going down. Okay. I'm not going to argue with it. Good. There's 2 ways you do it. Stay away if you're just bullish. If you only know how to buy and sell. If you're bearish, press. This is your time. That's it. If you know how to short, great. If you know how to take advantage of these things, great. Selling premium is not going to work either, by the way. If you keep selling a cash secure puts and then you're going to be in the money, deep in the money the next day, get assigned, roll, this, that. It's just too much work. It's not necessary. Just stay out. Stay out. It'll be okay. This will end. So with that said, please put a thumbs up. I enjoyed talking to folks. So I finished my hour right on the dot. I'm going to go have a cup of coffee. Maybe I'll do a day trade with 0 GTEs. I'm not sure. I'm not bored. I have a couple of positions that are negative. I'll have to close those down, take small L's again. But those small L's add up. But then it's much better than a capital L. Figure that out. Because to come back from a capital L is very, very difficult. Okay? Very difficult. So, but that said, my hat's off. I didn't wear a red hat because I didn't know where the market was going to be, but then we're red. So maybe one of these days I want to wear my green hat. You know, even on a bounce, like a dead cat bounce, maybe we're going to get. We're pretty close to it. So I may pull, just go check out the positions. I may pull a counter trend move on USO. Buy some puts going out to May, maybe May 85s, May 90s, something like that. You know, they're like buck 20. All I can lose is buck 20. But if we do get a crack here, I think they'll triple, quadruple here. So directional is where it's at. Yes, I'm a premium seller first and foremost, but directional is where it's at. Once in a while, you gotta have conviction, step up and do it. So with that said, much love, stay healthy. See you guys on Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. Adios.